Friday morning and welcome to Inside India. I'm Christine Tan sitting in for Sri Jegarajah, and here are your headlines. Cautious trade in Asian markets while Brent crude slips. The White House says President Trump will decide in 2 weeks if the U.S. will get involved in the Israel-Iran conflict. Indian lender HDB Financial Services targets a $1.5 billion IPO in what could be the country's biggest listing this year. And India regulators warning Air India over lapsed safety checks on some of its Airbus planes. Let's do a quick check on Asian markets today and how they're stacking up on Friday. Just a reminder, markets in New Zealand are closed today for a public holiday. It looks like it's a pretty mixed picture, but geopolitics still weighing on investors' minds. Concerns of a possible U.S. involvement in the Israeli-Iranian conflict weighing on sentiment, raising concerns, of course, of a regional, wider military conflict and implications that might have on energy supply as well as economic growth worldwide. Let's do a quick check on the Indian market specifically. Indian markets coming online in about 45 minutes. And here's what the Nifty futures are indicating right now. Looking pretty much flat at this point in time, 24,803. And that is for the Nifty. Dollar rupee standing at 86.8130. So they're coming online in about 45 minutes. So we'll keep a watch on the Indian market. Let's take a look at oil prices. Brent rallied nearly 3% overnight over geopolitical concerns. Right now, tepid gains, as you can see, 75.67 is where light crude is sitting, Brent crude at 76.96. As Iran and Israel continue to exchange rocket fire, President Trump now saying he will decide in the next 2 weeks if the U.S. will get involved. NBC's Gabe Gutierrez has more.
A new deadline as the world awaits President Trump's critical decision on whether to order a U.S. airstrike targeting Iran's nuclear program.
I have a message directly from the president, and I quote, "Based on the fact that there's a substantial chance of negotiations that may or may not take place with Iran in the near future, I will make my decision whether or not to go within the next 2 weeks."
European diplomats are expected to meet with Iranian officials tomorrow in Geneva. The White House says any deal with Iran would have to include a ban on enriching uranium, a demand Iran has so far refused.
If there's a chance for diplomacy, the president's always going to grab it, but he's not afraid to use strength as well.
The 2-week time frame, one the president often uses, from peace talks with Russia,
I'll let you know in about 2 weeks,
to trade negotiations with China.
At some point in the next 2 weeks or 3 weeks, I'm going to be setting the deal.
Now he's stressing why he's considering a U.S. airstrike on Iran's underground Fordo nuclear facility. The U.S. is the only country with the bunker-busting bombs that could destroy it.
Iran can't have a nuclear weapon. Too much devastation. And they'd use it. You know, I believe they'd use it. Others won't use it, but I believe they'd use it.
The president is increasingly relying on a small group of advisors for critical input, according to 2 defense officials and a senior administration official. The inner circle includes Vice President Vance, Secretary of State and interim National Security Advisor Marco Rubio, Chief of Staff Susie Wiles, Deputy Chief of Staff Stephen Miller, and Special Envoy Steve Witkoff. The officials tell NBC News that Director of National Intelligence Tulsi Gabbard has been sidelined. In March, Gabbard testified the intelligence community did not believe Iran's supreme leader had authorized the nuclear weapons program.
The IC continues to assess that Iran is not building a nuclear weapon,
earning this rare public rebuke.
I don't care what she said. I think they were very close to having it.
The U.S. CENTCOM commander just warned that if Iran wanted to move forward, it could have enough enriched uranium in roughly a week. Experts say it could then take more than a year to build a nuclear weapon.
Let's move on. Latest edition in Air India's woes. Reuters is reporting that the Indian aviation regulator had warned Air India of breaching safety rules. The warning come days before the fatal plane crash in Ahmedabad last week and is unrelated to that. In its report, the DGCA said that 3 of its Air India's Airbus planes flew despite emergency checks being overdue. Meantime, the airline has decided to cut its international operations by 15% until mid-July. This as inspections into its Boeing Dreamliner fleet continues. Air India reached out to its customers for the first time after the incident. In a long email, the airline reiterated that the engines of the Boeing Dreamliner that crashed were properly maintained. It also vowed to support customers in the subsequent delays and cancellations. Amit Singh is founder of Safety Matters Foundation and joins us now live from Mumbai. Amit, good to have you with us. When you look at the issues that have been brought up with Air India crash, lapses in safety checks, unverified emergency equipment, outdated registration among the issues found with Air India, how alarmed should we be that this has carried on for so long?
Good morning and glad to be here. The issues are more cultural rather than technical. Of course, there are technical culture. Is logical culture. In pathological culture, an airline or an operator does not do anything until they are caught. And the topmost is generative safety culture, in which everybody feels responsible for their safety and safety of others. So at present, we are slightly above the pathological culture, wherein we are getting news of more and more issues of violations and compromise with safety. So this is what we have been reported. There may be more. So there has to be a comprehensive review of the whole system, not just in Air India, but within the regulator also. So introspection has that how come they carried on for so long and issues keep cropping up.
This happens at a time where Air India is at the final phase of its turnaround journey. How big a setback is this for Air India, and what does the future look like for the carrier?
This is a big setback, especially when the Tata Group, which is a $400 billion conglomerate, has taken over Air India and other airlines like Air India Express, Air Asia India. And they were building a brand. So at that juncture, key juncture, this accident and revelations which are coming out has been a big blow. Fortunately, because the group is backing them, unlike Pan Am in US, which closed down after the Lockerbie disaster, the attack in which the aircraft blew up. So this group can cushion this financially. But what about the brand? The brand has taken a big beating, wherein now, because of lack of information to people of what's happening from the airlines or the regulator, there's kind of a jitteriness or panic among people that are they safe or not, because every day things keep cropping up. But I'm sure the Tata Group is resilient and they will bounce back with more communication and better communication, interaction with passengers and building the brand back.
Amit, when you look at what Air India has done, it's cancelling international services on its wide-body aircraft by 15% until mid-July. At the same time, it's undergoing checks on its existing fleet. Is the ultimate solution simply to renew and refresh its fleet? Is that the ultimate goal that will bring back in passenger confidence?
Well, when the Tata Group took over Air India, there were a number of issues. So the ideal situation would have been to close down the airline and build afresh. But that was not a possibility or a practical solution. So they had to build on a shaky foundation. So to strengthen the foundation and continue to grow at the same time is a very difficult job. A stitch in time saves 9. So they should have gradually grown while strengthening their foundation. So that is where things went wrong, where there were too many changes happening. Mergers are not very successful. We have seen in the history. But if you want to go ahead, then it has to be slow and steady, because it's a cultural integration of work culture from different places. The leisure line, which has been taken over, the Tata Group has a very strong culture, and others, and you have the national culture. So to bring about a change, you have to have a strong person on top who drives it and who is seen as a mentor, that this is the person who can bring about a change. So typical example, I always salute Singapore for that. And Airlines for their culture, work culture and ethics. So that needs to be, something of that needs to be replicated here.
And speaking of Singapore Airlines, Air India, we know, is owned 25% by Singapore Airlines. A lot of questions about Singapore Airlines' stake and involvement in fleet maintenance and operations. Does this disaster, does this tragedy, spark broader discussions about the role of foreign stakeholders in Indian carriers and their accountability?
Yes, it does, certainly. When we have seen globally big brands being headed by Indians, and then we see in India the brands headed by expats, so there is always a question, why do we not have talent in India? Or is it just about the money or the stake? If it is a stake, it is understood. But the person leading has to integrate with the people. So there are successes, like Indigo is very successful. But Air India is a bigger issue because it is a merger of 4 airlines and a 5th partnering. So that is a big concern. So if you get people, the right people on top, or grow people from the airline, that is more acceptable, rather than getting people straight on the vertical, the heads, and the lower people, the lower rung of the airline being managed by these people. So that is kind of a mismatch or dichotomy, that you're not growing ingrown talent, which is the core of the Tata Group. That is their culture, that we have to promote our internal people. So what is the motivation of the people? So anytime performance is motivation and a product of your resources and capability. So if your motivation is low, even though you have resources, you cannot succeed or may not succeed. But if you're highly motivated without or low resources, low capability, you will still succeed. So we have to look at the bigger issues rather than pinpointing or going for the smaller ones.
So it sounds like a total restructuring, a total transformation is still needed. If you can draw the parallel of what happened to Malaysia Airlines, it suffered the 2014 tragedy. We all know it took about a decade before they finally became profitable. Are we looking at the same time frame for Air India?
It's already about 3 years since the merger or the takeover. And had the accident not happened, it would have taken another 3 or 4 years, because the rate at which they were growing and the growing concerns, issues cropping up every day, it was easily a 6-7 years process. Now this is extended by another maybe 5 years to renew the fleet and to integrate people under one head. So right now it's all scattered everywhere. So who's in charge, who's running the show, it is not very clear. Someday the CEO comes in, Mr. Campbell, someday the group CEO comes in. And who is calling the shots? Even the employees are not very clear about that. So that is a concern. One person should be clear, the leader has to be visible and be interacting with the people. So that is the message which has to go across.
Amit, well, the regulators are certainly getting involved, because after the crash, we had India's civil aviation regulator seeking enhanced surveillance of Air India's Boeing 787 fleet. Do you think there's enough regulatory oversight over India's aviation sector, which is one of the fastest growing in the world? Do you think an overhaul is needed?
Yes, a complete overhaul. And that has been recommended in 1997 by a committee headed by an Air Marshal, J.K. Seth. The report never saw the light of day because it told the truth, what needs to be done. What was written in 1997 is effective today also, that the regulator does not have technically qualified people, enough people, and it is not matching with the growth of the industry. We know how many aircraft have been ordered by all the airlines. So the regulator also has to enhance their personnel, their training, their quality and standards to match with the growth. So they cannot say that if we have a new technology like the Airbus 350 or 787, so we cannot download the CVRs, DFDRs, etc. So that there's again a mismatch or a gap between the regulator. ICAO did a audit in 2022, wherein the report said that the safety management system was not performing up to the standards. So that is where the safety resides, all safety activities. Even though your score may be high, but what matters is the safety management system. So the oversight is inadequate, which needs to be revamped. So the whole system, we don't have an aviation roadmap or a vision for the next 25 years. So we need to revamp of the aviation system, not just the airlines or the regulator. The training, we don't have adequate institutions for training high quality professionals. All are being outsourced to foreign companies. So big drain of national forex, but also that we are not building our foundation, even though we may be the third largest in the world.
Amit, do you think someone at the top should take responsibility for the air disaster? Should the CEO step down?
Well, I won't say step down, but there's a term duty of care. So there is a person, an accountable person, who has a duty of care, which means he's responsible. Under his watch, the accident happened. So we are not blaming anybody, but the person was at the top. So if you're a leader and something happens under your watch, ultimately, the buck stops there. So people will be asking him questions. How did this happen? So you cannot say, I'm not responsible, or the investigation report will tell you who's responsible. The investigation under Annex 13 does not look for a blame or put a blame on a person or institution. It looks for the root cause. So I will give an example again of Singapore Airlines. When the Taipei accident happened, SQ006, the crew were arrested in Taipei, Taiwan. Singapore issued one statement. It was our crew, it was our aircraft, we are responsible. So that is the message which goes across, rather than here the group CEO comes in and says, I'm not responsible, the investigation report will tell. So that is kind of not a very message of a confident leader, a strong leader. Strong leader should say, I'm responsible and I will step down. Step down. It is different that people do not accept the resignation, but he should always offer that under my watch, such a thing happened.
There were also issues whether Boeing should be blamed as well. What is your view on that?
Again, the issue is not about blame, but why do we not have the capability of individually evaluating an aircraft? If we go and order an aircraft, be it Boeing, Embraer, or Airbus, everybody will offer the best. Nobody will tell you that these are my limitations or drawbacks, because it is a marketing issue. But we should have the capability when we are buying a product to determine what works for us and what doesn't work for us. Unfortunately, our regulator still hasn't developed that capability of individually evaluating an aircraft. Even though we wish to build an aircraft, countries like Brazil have a joint evaluation board, and they did evaluate the Boeing 737, and it was the only country globally which was training the pilots for MCAS, because they build an aircraft, so they have built their foundation and infrastructure to individually evaluate, not go by what is presented by EASA or FAA. So they knew what's inside the Boeings. So similarly, we need to go and inspect and individually find out, ask questions. So for that, we need people, the trained manpower of that capability. We have scientists, we have sent satellites, landed on the moon, everything. So we can do it. Capability is there. The intent is the main thing.
Amit, before this crash, Air India had ambitious goals. It wanted to target 30% of the domestic market by 2027. It also had ambitions to grow its international routes. Where do they stand now? Does that mean that competitors and rivals will now take over? Who stands to benefit from Air India's demise?
It's not a demise, it is a temporary pause. Like I said, a stitch in time saves nine. So they should have built the foundation, and then on that strong foundation, launched their ambitious projects. So right now, their foundation is kind of shaky, and they want to launch. So that is where they're faltering. Obviously, Indigo, who has ordered so many more Airbus 350s, is going to benefit as they have benefited in the past because of non-performing or not adequate number of competitors. So right now, there are two big airlines, Indigo and Air India. Then we have SpiceJet. So SpiceJet might capitalize on this, but not to a great extent. But Indigo is going to go exponentially, like they have done before.
The last question.
Around 2011, when the economic downturn happened, everybody was returning aircraft. So Indigo decided to go ahead and capture the market. So they have their ambitious plans, and they are willing to take the risk.
Amit, thank you so much for your time. You're right, that word demise was not properly used. I apologize for that, but we are all hoping for a recovery, a strong recovery from India, Air India, after this disaster. Thank you so much, Amit, for your time. Amit Singh from Safety Matters Foundation. We're back in 2 minutes. Welcome. And welcome back to Inside India. Amazon is expanding its operations in India. The company will invest $233 million this year to improve its operations and develop new technology. It will also use the money to launch new sites and upgrade its existing ones. Amazon is creating an operations network in India to deliver products to all serviceable postal codes. Amazon has been busy in India. Its web services division has targeted over $12 billion in data center investments across the country by the end of this decade. This is the growing demand for AI fuels a data center boom, which in turn has spurred a huge surge in energy demand to power those data centers. JP Ong was at the Energy Asia Forum this week, and he took a closer look at the space.
The world's appetite for artificial intelligence is fueling a boom in new data centers around the world and driving a surging demand for power. According to the International Energy Agency, energy consumption from data centers is expected to almost double by the end of the decade, which means adding the equivalent of Japan's entire power demand to the global grid.
A single data center in the past used to be 10 to 20 megawatts. Now that number has started to be more 100 to 500 megawatts. And that is the equivalent of almost a small city. So every data center is adding the capacity of electricity needed.
Feeding these voracious data centers is no easy task. Groups like AWS are trying to satisfy the huge appetite for data while trying to keep energy emissions to a minimum.
It's a combination of energy sources you want to look at across the globe, because you're always looking for power stability in running all of these data centers. And so that means that renewable power has to be in that mix, and that includes solar, wind. In the US, we've got nuclear today.
A greater reliance on renewable energy makes it critical for companies to ensure power grid stability, while at the same time, operators need to look at reducing energy waste.
Another factor is going to be energy efficiency, or as sometimes the industry call the power usage effectiveness. And many of the data centers are working on reducing that coefficient, so i.e. less wastage.
To help maintain data centers' energy needs, a lot is hinging on how efficiently operations are run, with cooling technology and even AI advancements being used.
Through some of the new cooling technologies we've just introduced, liquid cooling to be specific, we are reducing the mechanical energy drawn into those data centers by 46%. That's one aspect. The second aspect are the chips. AI, generative AI, is what's really consuming a lot of that power. And so we are working and really building purpose-driven chips that helps reduce the power requirements.
And as AI moves from science fiction to a daily tool, the investment in energy and new technology is certain to boom. For CNBC in Kuala Lumpur, I'm JP Ong.
Well, coming up next, with tensions escalating in the Middle East, global shocks are piling up. Is India insulated enough to navigate these issues, and where does it stand among its Asian peers? We'll discuss all of this with Rob Suparaman of Nomura after the short break. Right, let's take a look at Asian markets and see how they're stacking up this Friday. A little bit of a mixed session. Some of the markets trading in the red. Australian market and the Taiwan-weighted index markets pretty much flat. Still lots of concerns, geopolitics and concerns that possible U.S. involvement in the Israeli-Iranian conflict and how that is continuing to weigh on sentiment. Let's all zero in on the yen, the dollar yen, a traditional risk asset in light of the global geopolitical tensions. Currently, dollar yen is at 145.27. We also had Japan inflation data out this morning. Headline CPI rising to a 2-year high. Lin joins us now with the details. Lin, how will this affect central bank policy?
Well, Christine, I think it will only add to potentially a complicated road ahead for the Bank of Japan, because the inflation risk in Japan has risks on both sides. And perhaps in terms of the outlook, that could be best characterized by what Stefan Anrich, a senior economist, said in response to the data. If we have the statement as well, he said that if the Bank of Japan was to hike rates now, it could curb yen weakness and also address the inflation risks, but damage growth, which we know has been fragile, with a contraction recorded in GDP for the first quarter of this year. But he says that if they were to hold steady, of course, the inflation might stay elevated, and that also impacts domestic demand as well. Certainly the view that he has, and many economists and market expectations, is that given the heightened uncertainty around the economic outlook, around US tariffs as well, that the BOJ will stay steady for the time being, but that it is likely not done hiking. And I think on that front, there's two things to look at coming out of this data. That is food inflation. And we've seen, of course, elevation on that front, particularly when it comes to the politically sensitive staple rice. And again, for May, a more than double year on year in terms of rice prices. Keeping in mind that this data lags behind current conditions, we should expect that to subside in the coming months' data as well. And then the other thing to look at is the risks ahead when it comes to particularly energy prices, given the instability that we are seeing in the Middle East that looks likely to persist as well. And then when you look at these two factors, coupled with what the Bank of Japan's Governor Kazuo Ueda has been saying about inflation, recognizing here that if they see entrenchment in terms of that sort of data on food, on oil, so forth, that could inform inflation expectations and therefore impact their views on underlying inflation. And perhaps that is when we could see a move from the central bank. Christine.
Lin, thank you so much for that. Lin, on the Japan Central Bank policy. Now, we are counting down to the market open over in India. This is how things are shaping up. Let's take a look at how Nifty futures are doing, pointing to a positive start right now at 24,760, and dollar rupee sitting at 86.60. The currency has been hitting multi-month lows as tensions in the Middle East continue to weigh on emerging market currencies. This even as the dollar index has been on a steady decline. Former chief economist of the IMF, Kenneth Rogoff, was on Squawk Box Asia this morning, and he believes the DXY still has more downside.
Very, very high. Even now, it's come off maybe, 5% on a real basis, at most 10% from what was a very high value before. I don't think we've seen anything like it since 2002, 1985. So I actually think the dollar was headed down. I talk about that. I stuck my neck out in the book, even knowing it wouldn't come out for a while. And I think real interest rates are going to be higher for a very, very long time. That era of low interest rates is over. So, Trump has been an accelerant of trends that were already happening. I don't think he's a cause.
Meantime, over in India, the central bank is easing infrastructure loan provisioning norms. Earlier, the central bank had proposed setting aside 5% of the loan value to cover potential losses. That requirement is now set at 1%. This is expected to spur loan activity in the sector and in turn boost economic activity. Lenders have been wary of the sector due to long delays in projects and uneven loan recovery. Let's talk more about India, everything India, as well as the rest of Asia. Rob Subbaraman is head of global macro research at Nomura. Rob, hey, good to see you with us. Happy Friday. What do you make of India, RBI easing provisions for infrastructure loans? How big a boost is this going to give to the infrastructure sector?
It's going to certainly help. I think it follows on the back of the jumbo rate cut by the RBI of 50 basis points recently that surprised the markets as well. So it looks pretty clear that the RBI is in broad monetary easing mode. And, you know, specifically for this recent measure of easing the macro-prudential restrictions on lending for infrastructure, I think it's a very good thing. I think if you look at India's balance sheets, the corporate balance sheet is very healthy right now. Inflation is very low by Indian standards, 2.8%. And it's the time to ease policy. And particularly, you want to try to direct the demand and spending into worthwhile investments, and infrastructure is a key part of that.
Right now, looking at infrastructure, the sector only represents about 3 to 4% of India's GDP. If things go along as planned, it could have a multiplier effect because infrastructure, you know, spurs economic growth, it creates jobs. Could it be a bigger percentage? Could it spur growth? Could it be a big driver for India's economy?
I think so. I mean, I'm in the camp that India is on the cusp of a multi-year investment boom, and it's going to be very important that it's led by productive investment, and infrastructure is a key part of that. And Christine, why that's so important, if you look at the history of India, when you do have these investment upswings, you know, they often lead to going to the wrong spaces, like property speculation, and then you get inflation, and then you have to raise rates again, and then growth slows. So it's very important that it gets allocated properly into the parts of the economy where there is productivity. And as you said, this could be this, if we get an investment boom that's good investment, you then feeds back into growth. And you know, the thing I think a lot of people miss, and particularly those in India, is the economy. It's not a small economy anymore. This year, if you look at IMF projections, the India economy in US dollars is going to be around $4.2 trillion. It's going to overtake Japan this year to be the fourth largest. This is 2025. In 2 years' time, it's going to be about 5.1 trillion, and it could be overtaking Germany to be the third largest. When your economy gets that big, the critical mass, you're going to attract a lot more investment. So, you know, this investment's key, but it has to go into infrastructure, soft and hard, education, health as well.
Could it overtake China?
That's still a long way away. But I would say that, you know, if India plays its cards right, and I think in terms of macroeconomic policies, monetary and fiscal, very prudent in recent years, India could be moving on to the path that China was over 20 years ago. If you go back to 2001, China joined the WTO, and that's when its economy started to take off, investment started to take off. We could be on the early stages of that for India.
The RBI recently cut its benchmark repo rate by 50%. That was almost about 2 weeks ago. And it kind of shifted its policy stance from accommodative to neutral.
Yes.
So do you feel that the central bank is done with its easing cycle, or is there still more room to go?
So a lot of people thought after that surprise 50 basis point cut, when most expected only 25, that, oh gosh, this is a big cut, the RBI is going to be done cutting rates, especially because they shifted their stance only to neutral. But our view is there's more to come. And the big reason is we feel that inflation in India is going to remain very benign. We think in the coming months it could be close to 2%. The latest reading was 2.8%. And that's the bottom of the RBI's 2 to 6% target. So we have 2 more cuts this year, 25 basis point in September and December.
You're right, because their surprise rate cut really drove the bond markets a little bit crazy.
Yeah.
Where do you see bond yields?
We think there's still room for bond yields to actually come down further. And again, it's partly due to the low inflation and further rate cuts. But also, if you look at the fiscal situation in India, it's improved a lot, especially on a relative basis compared to, gosh, Christine, nearly every other country out there has worsening fiscal positions. India's actually improving when you look at the budget deficit.
India's rupee also cannot be taken for granted. If you see how the RBI has been behaving, it's been selling dollars to support the rupee, yes, especially in the light of higher energy prices. How much can India continue to do this? How big is the foreign reserves that allows India to continue supporting its own currency?
Well, I think there's still a lot of room to, it's always easier to build up your reserves than run them down, because you can only run them down to zero. But, you know, in India's case, if the view we have is right, that the fundamental story for India is a positive one, and it's going to be attracting a lot of capital inflows, I think there's room for the RBI to manage the currency and replenish FX reserves, because they had been drawn down quite a bit in the past year or so. And we are in a world of extreme uncertainty. It's good to have a reserve buffer. So I wouldn't be surprised if we see the RBI leaning in and managing INR appreciation, which, by the way, we think is going to continue. We have INR against the dollar at 84.5 by the end of the year.
Okay, and of course, when we talk about India, there's also the US trade deal. That seems to be looming on the horizon. 3 weeks to go before that deadline comes. Are we likely to get a deal? How hopeful are you?
I mean, I think India, if we look at Asia, it's near the front of the queue in terms of negotiating with the US. Maybe India and Japan are both there. You know, when we talk about a trade deal, I think it's not all done and dusted. Usually these things take years to be formalized. But I think we could get some form of agreement between India and the US. You know, India could step up buying certain products from the US and opening its markets to an extent. And, you know, if India does get a deal and does get lower tariffs relative to a lot of other Asian countries, that could also spur more investment, overseas investment into India. There is a first mover advantage, I think, with these trade deals.
Well, with the trade deal, some of the sectors in focus would be automobiles, pharmaceuticals, steel, defense, and very sensitive agriculture as well. Yeah. Where is India likely to make concessions?
Well, I think, you know, the one the US wants is agriculture, and I think that's a very big sticking point, because politically, you know, food prices have won and lost elections. Price of an onion in India has done it in the past. So I think that's a challenging one. But when it comes to other areas like steel and autos and pharmaceuticals, I think there is room for India to open markets and also buying more energy, defense materials and so forth from the US. So there is room, I think, on both sides to negotiate here. I do feel, though, that baseline 10% tariff rate is going to stick for the US. So it's more these sectoral tariff rates, if they can get some concession. And of course, Christine, non-tariff barriers are a new growing area where there's a focus now. And I think India as well, that's going to be an area, right? India is still a service-based economy, not a goods-based economy.
I know the US would probably be more keen to see India buy more of its military gear and equipment from the US instead of Russia. Do you think India is likely to take this, is likely to address this?
We'll see. I think one thing that we've seen and observed under India and Prime Minister Modi is that the country is very good at hedging the other superpowers, whether it's China, US or even Russia. So I think India is quite shrewd in trying to offset these other players. So it'll be interesting to see.
It's interesting to see also because we know that Tesla also wants to expand in India, but it couldn't because of the high tariffs. Do you think this deal could see Tesla being in India?
I think ultimately, right, if we step back and look at what's happening, I think there is this theme of China plus one, of diversifying away from China into other big emerging markets. And, you know, if you look at India relative to a Brazil, a Russia, South Africa, Indonesia, it's the fastest growing and has I'd say, relatively good fundamentals now. So, you know, there'll be ups and downs, but I think ultimately many of the big US companies are going to be stepping up investments into India in the coming years.
Okay. When you look at the markets today, they are completely overwhelmed with what's happening in the Middle East conflict, the potential involvement in the US in the Israeli-Iranian war. The central banks overnight, we had the BOE holding steady, but we had Norway's banks with that surprise cut.
That was a surprise.
That was a surprise cut. We had China keeping its lending rates unchanged, Japan as well. Is this conflict going to rattle central bank policy worldwide?
I don't think to a large extent. Our baseline, I would say, is, and I think the markets also are hopeful that there is going to be a de-escalation, and Trump's given this usual so-called 2 weeks. And, you know, if that happens, I think there is a net oversupply in oil if the Middle East de-escalates, and oil prices will come back down. So that, I think, is, you know, probably the baseline. If this gets really bad in the Middle East and oil prices go through $100, clearly it's bad, and it's going to make it much harder for central banks to cut rates. The one thing I would say for Asia, and particularly India, is there's buffers to stop higher oil prices feeding into inflation. The oil marketing companies have decent margins that they can run down. Fiscal is in much better position, so governments can absorb some of the cost. And even India's oil refiners, so they import a lot of raw petroleum and refine it and export it out, they could divert some of that to domestic production. So, you know, inflation pressures would build if oil prices shoot up a lot from here, but there's a lot of buffers, and and inflation is starting from low levels across Asia. So compared to past big oil spikes, and if this does happen, we don't know yet, I would say India and Asia is starting from a better position.
Does that mean that if anything happens in the Middle East, we could see capital inflows move into Asia? Is that what you're predicting?
I think if Middle East settles down, I think we are going to start to see stronger capital inflows coming to Asia. I would say, you know, in the recent months, with this theme of US exceptionalism waning, we have seen some sign of that. But, you know, Asia really, Christine, ever since the pandemic, has not had strong capital inflows. So there's a lot of scope for foreign investors, global investors that have been underweight this region to start lifting the weightings higher.
And on the back of that, which Asian markets would you bet on for these foreign inflows to come in that, you know, investors can really take advantage of?
Yeah, so our three kind of leaders in the region, if you like, in terms of economic performance, are in emerging Asia, India, Malaysia, and Taiwan. The latter two benefiting from the AI boom as well. I would also say Japan, as a developed economy, has a lot of scope. I think that, you know, our view is the yen is still very weak, and there's a lot of interesting opportunities in Japan as it's exited from deflation, and how all the dynamics there are changing. It's becoming a more dynamic economy, we think, over time here. So, you know, by the end of this year, we see dollar yen at around 135. So got some room for yen appreciation from here.
In terms of sectors, what do you like?
In where?
In Asia.
So the one thing I'd say about sectors, and you know, speaking very broadly here, is that Asian exports are going to get hit. They are going to come under a lot more pressure. There's been front loading of exports. The opposite of that over time inevitably is going to be payback. So we think export growth is going to be very weak this year. We know that central banks and governments are expanding monetary and fiscal policies in Asia. And so we do think there's going to be a rotation in terms of the sectors that perform away from exports and more to domestic demand. So, you know, I'd look particularly at domestic-related stocks.
And very quick one, speaking of domestic demand, we have Amazon expanding its operations in India. I mean, this is really banking on the growth, the consumer growth in India, isn't it?
Absolutely. And we talked about Tesla before. This is what I said. You know, I think we are going to see more and more stories like this of big multinational companies, not just US ones, but multinationals everywhere, starting to do more investment in India.
Rob, hey, great to see you here on a Friday. Thank you so much for being with me here in studio.
Thanks, Christine.
Thanks for your insights. Rob Subbaraman from Nomura. Coming up next, Indian markets joining the trading day. We'll take a look at some of the movers in Mumbai after this short break. We're back in 2. Well, Indian markets are online right now, taking a look at where the Nifty stands, pretty much flat at this point in time, 24,844. The 25,000 level is the critical level to watch, the resistance level to watch. Dollar rupee sitting at 86.59, strengthening just a little bit against the greenback. Right. Some things we're looking at, some of the movers in the Indian markets. Today, IT giant Tata Consultancy Services has publicly addressed the Marks & Spencer cyber attack for the first time, firmly stating that none of its systems or users were compromised. At its annual shareholder meeting, the IT giant clarified on the investigation. Independent director Keki Mistry presided over the meeting as Tata Group's chairman skipped the AGM to deal with the crisis at its airline Air India. Elsewhere, shares of Sun TV are in focus today. A family feud is playing out in the media network. Its chairman and founder was served as a legal notice by his younger brother, who is also a member of the Indian Parliament. The legal notice alleges that the chairman had indulged in fraudulent practices. We're also focusing on the IPO market in the country, a test for investors' appetite as lender HDB Financial Services plans to launch its public offer next week. HDB has set a price band of 700 to 740 rupees per share, aiming to raise $1.5 billion. It would be the country's largest so far this year. Its parent company, HDFC Bank, will be selling its $1 billion stake in the company during the offer. And as broadening out from India to global capital flows, there is a shift in dynamics amid the ongoing trade and political tensions. The question that remains is if U.S. exceptionalism losing its edge as a result. What challenges and opportunities does that pose for global markets? In this week's The CNBC debate, Martin Sung speaks to the leaders of the global stock exchanges to find out more.
Almost 60% of reserves are in the US dollar. The US stock market is about 60% of world capitalization, and the debt market is about 40%. So the US is still an important anchor for the global financial system. That said, Asia in particular has led global growth in the last decade, and even more so in recent times. In terms of Asia and EM growing, I think in particular as supply chain reconfigure and economies in this part of the world continues to grow, I think Asia will be a net beneficiary of some of the capital flows.
Leila, let me bring you in on this. The Joburg Stock Exchange, Joburg is considered an EM, correct? And so far, since the start of the year, all this chaos has actually benefited your exchange, has it not?
Indeed, and so we are starting to see South Africa-specific dynamics is generating a level of confidence and a level of attraction. The South African stocks are also have been congenitally undervalued for the last 5 years, and so they're good value. And those two factors combined with the macro global shifts between US and the rest of the world is certainly beneficial. And we're very pleased to say that at the exchange, price formation has been well established. Our systems have been stable and resilient. We are at an all-time high, and we're enabling functioning markets.
And that's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is coming up next.